So I want to do an update on my 10K premium selling portfolio. I think it's important to try to follow this on a relatively daily basis because when the market's volatile like this, it's nice to get an idea of how things work out during the volatility and my thought process along the way. So if you saw my videos yesterday and the day before, the market was dropping pretty big time. And let's look at the QQQ, and you can see here we had some big market volatility in the last few days, and during that time volatility was increasing dramatically on all the stocks. We had a huge debacle in LinkedIn. We had LinkedIn drop 50%, 40% off of earnings, and things are getting really crazy. And when you're a premium seller, if you're going to be a successful premium seller, you better be making some kinds of trades on those days, because those are the best days that you'll have, the best chances you'll have at getting really, really high inflated, beyond normally inflated premiums. So as a premium seller, you need to situate yourself in a way that you could take advantage of big volatility spike days, because volatility, in my opinion, it is much easier to pick a volatility reversal than a directional market reversal. Does that make sense? If it's easier to pick, it's a lot harder to pick a bottom here when the market's going down rather than picking a top in volatility. I wouldn't say a top, but it's easier to, volatility naturally always spikes and comes back down. It never usually stays very elevated, right? So you can probably better bet on volatility coming in after a few days of volatility expansion. You can probably bet that it's going to come in on maybe somewhere next few days at least, and you can take bets on that selling premium. So you can see right here we spiked, and then we just had a drop today. It wasn't a lot, but it was enough. It was enough to bring in profits on premium selling strategies. So, yeah, 2 days ago, during the market turmoil, I was selling premium in my portfolio while the market was falling, and the only reason why I was able to do that is because I had cash. I had enough cash available. And you might say, "Oh, this is Mike's virtual trading account. This is not how he really trades. This is fake money." Not really. This is my real account, and you can see that my long positions are up $1,000 today, and my premium positions are up $300 today. So I'm up overall $1,400 today, mostly because the market reversed and premium came in. So this is how I really trade. I kind of look for days where premium is really high, and I try to sell premium on those days. But the only way I can do that, the only reason why I could do that, is because I was mostly cash during that time. If I wasn't mostly cash and my positions were all getting slammed with the market, there's no way I would have the opportunity to sell premium, because I would be too tied up with my losing positions, right? So premium selling is not about just premium selling at any given time. It's about strategically placing yourself in a position where you're ready to sell a premium at the right time. And the last couple days was perfect timing for that. And I'm not even saying that premium came in that much. It hasn't. The VIX index is still at is still above 25, but it came in just a bit, just enough to get some breathing room, so these premiums could come in a bit and make $200 on Amazon, $92 here, $145 in here. Netflix making a move. Netflix is actually down today because it's making a move so large, 447%, that my loss on my calls are outweighing the losses on my puts. But if you see here, I have stock. So that's neutralizing the deltas on my naked position. And that's how I neutralize naked positions when I see a run moving on. So now my Netflix stock is up 226 and my Netflix strangle is down 142, so that's a net profit. So the goal of this was to show you how I trade in my real account, which is about $100,000. This is my real broker account, real money, my own money, and how I would trade in a smaller account. And you can see I have a lot of the same positions. Facebook, BABA, and FIT. These are all short strangles. So I'm trading in a way, in the same way that I trade with real money. And that's what I recommend you do on TraderMob. I recommend you use TraderMob in a way to practice trading strategies that you would actually deploy one day in real money. And if you don't have a real money account, that's fine. Start practicing now and practice in a way that, treat it like real money. It's only going to benefit you if you treat it like real money. If you come in here and just play around and don't plan on learning anything, that's fine if that's your goal. But if one day you want to know how to manage money in the real world, treat it like real money. And you can see what I'm doing is I'm trading very similar to my real account, but I'm trying to do it in a smaller account, $10,000, and see how I can do it differently and see if I can still be successful. So today I'm up almost 1% on my 10K portfolio. And if you saw my last video, these are all losers for the last 2 days. For the last week, Facebook was a loser. Since I opened it on February 5th, you can see here, February 5th I opened it, and you can tell by here exactly where I opened it. Looking at this chart, you can see that this flag here shows where I placed the trade in relation to the stock Facebook stock price. So it's pretty cool that I can see where in time I did it. And so here I made the trade. Volatility was spiking, right? And this is my automatic trade journal. Right? This is a trade journal following my trades and my thought process, and I can look back at this and see how I was doing in terms of relation to what I was thinking. So if I look back on this the history here on my trade page, 5 days ago, I made a trade. I made a strangle trade on Facebook. My thoughts on that day were volatility was spiking the day after LinkedIn dropped 40% off of earnings. Remember that earlier I was talking about that LinkedIn debacle where it drops 40%, and that's a lot. And the market tanked the next day. The NASDAQ was down 3% the next day. So I was using this opportunity to sell premium in a naked and a strong tech stock. So my strategy was Facebook was not going to do what LinkedIn did. It already had great earnings, and so there's no way it's going to follow LinkedIn down 40% like that. So there's no way. So I used that opportunity, and I can show you here that I entered a strangle. And you can see that on the profit loss trend, it went from I was down $67 for 3 days in a row. I lost money, and then in one day today where we had some breathing room, I got it all back, and now I'm up $22. So the profit trend shows here how things change over time, and I can see all my transaction history here. I sold a call at 65 cents. I sold a put at 96 cents. And if I look at my performance of this portfolio, so I was losing money. I opened Fitbit here. My first trade was Facebook, and then I opened Fitbit. Market was down. I opened Fitbit. Again, market was dropping. Volatility was rising. I took advantage of it. I opened Fitbit. The next day, market was down again. Volatility was still expanding. I opened BABA. Today, volatility came in a little bit, just a little bit, and we gave us some breathing room. It wasn't another down day, and all of a sudden my profit in this portfolio jumped into profitability. So it's cool to see all this, what I was doing over time, and you can see my commissions now are below my profit line. And you can see now all my positions are in the green. $10, $11, $27. My daily profit swing loss, I was losing money for a while, and then now I'm getting profitable. And my commissions, and I spent more commissions the last 3 days over here, and I haven't spent any today. So this gives me a really good view of what's going on in my account over time. So I can see trends, I can track my performance, and I can look at all this stuff, and I can look back in time and see what I was doing. So today, I'll write a comment on my portfolio. Short vol selling strategy working today as the market pauses for takes a breather. I feel like that's what I feel like they're doing. I feel like that's what's going on. The market's taking a pause, and I really don't know if it's going to go down again in the next couple days, but it's trying to take a breather. It's trying to take a stab to the upside. The bulls are trying to gain some momentum, and maybe we can reverse off this bottom. And if it does, volatility will continue to fall. So portfolio is in a good position. A good position today. Will not sell any more premium today and wait to see the next move in the market. So I'm just posting a thought. This is just a thought of what's going through my head today. And if I post it here, you can see that it takes a snapshot of where my portfolio is. I'm up $48 at this point. And my winners were 3, my losers were 0, my commissions were 5. The last time I made this trade, I made a comment. My losers were 1. I had 1 loser and commissions of 2, and my portfolio profit was 0. So you can see that every time I make a comment, it takes a snapshot of your portfolio in time, and you can see how things were good, and think about, and you can kind of relate your comments to how your portfolio was performing at the time. So today, on a day like this, I'm just gonna sit tight. I don't want to enter positions right now because the reason why I don't want to enter new positions right now is because the market may turn around again tomorrow and volatility was spiked back up, and I want to be ready to take even more opportunity on. So in general, ideally you want to be adding positions while the market is falling and volatility is rising, and you want to be closing positions when the markets are stabilizing and volatility is falling. But I still have plenty of credit left in here, so I'm not going to take my profits just yet. So I'm going to sit tight today, and I'm going to sit tight in my real portfolio too. My real portfolio, I took a beating in the last week because I took a beating in the last couple of weeks because I was selling premium on the way down while the market was going down, and I was taking losses. But I got most of that back in one day. And now we'll see if I can take advantage of the rest of if the volatility continues to come in, and see if I can continue to make money back on the upside. And you can see here I have plenty of long deltas. So another thing about comparing this portfolio to a $10,000 portfolio to a $100,000 portfolio, in my $100,000 portfolio, you can see I'm taking a lot more positions. Obviously, because of the money, the capital, but it's more flexible, right? I can go a little long on some stocks. I can go long Facebook, long Netflix, along with my premium selling. So I can combine premium selling with the long stock to make it a delta, to make it a more neutral trade, but have myself with a positive delta with the stock. So with this Netflix trade, you can see that I can make money all the way to 105, which is 18% away. So my stock allows me to do that. If I take away the stock, this position becomes a lot more bearish. If I add the stock, it's neutralized a bit, so I can make money to the upside while taking advantage of theta and taking advantage of volatility and contraction. So I think it's pretty cool for me to trade 2 portfolios in the same way, and try to manage a considerably smaller portfolio and try to see what I can do with it. But as you can see, it's basically I'm doing a lot of the same kind of trades. If you look at my portfolio here, the only reason why it's different is because there's more money, and I can have the ability to have more adjustments. So when you have more capital, you have more flexibility to adjust trades and adjust these strangles and add more trades and add more chances of success by spreading out your bets. So You know, to increase your chances of success, you spread out your bets and you minimize each one. So you spread out a lot of small bets, and you can probably make a lot of small gains and gain consistency over time. You don't take big bets and hope that you make money that way. That's not the way you sell premium, and that's the way to lose a lot of money and blow up your account if you go that approach. So everything's good today. Today's a good day for premium selling, and we'll check back and see what happens if the market continues this trend or if we reverse.